Based on the historical data and forecast, Bitcoin has been fluctuating within a range, with support at $65,700 and resistance at $68,900. The RSI indicates periods of oversold and overbought conditions, suggesting potential for price reversals. The Bollinger Bands show periods of volatility and contraction, indicating possible breakout opportunities. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands. Initially, on March 4, 2026 Wednesday, with the forecast price at $66,200 and RSI at 33.0, which is oversold, we will enter a long position at $66,200. The stop loss will be set at $65,700, just below the support level, to limit potential losses. The target price will be $68,900, the resistance level, aiming for a significant profit. Subsequently, on March 9, 2026 Tuesday, with the forecast price at $66,600 and RSI at 41.5, we will enter a long position at $66,600. The stop loss will be set at $66,200, just below the entry level, to limit potential losses. The target price will be $67,300, aiming for a moderate profit. This combined strategy balances the potential for high returns with risk management, taking advantage of both RSI signals and Bollinger Bands breakouts while respecting support and resistance levels. This portfolio is efficient because it utilizes the most effective strategies from the three strategies. Based on the historical data and forecast, Ethereum exhibits volatility with a general downward trend in the forecast period. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The recent dip below the oversold level of 20 on February 28 and March 2 suggests a potential temporary bounce, but the overall trend remains downward. The Bollinger Bands show that the price is currently near the lower band, indicating potential for further decline. Considering these factors, I recommend a short selling strategy. Entry price should be $1,920, with a stop loss set at $1,940 to protect against a sudden reversal. The initial target price is $1,890, aligning with the forecast for March 4. To maximize returns, I suggest a dynamic approach. If the price reaches the initial target of $1,890, consider moving the stop loss to the entry price of $1,920 to lock in profits and allow for potential further gains. If the price continues to decline and reaches $1,850, adjust the target price to $1,910. This strategy combines RSI oversold signals with Bollinger Band confirmations and forecast data to capitalize on the anticipated downward trend while mitigating risk through strategic stop-loss placement and profit-taking adjustments. Based on the historical data and forecast, BNB shows a downtrend with recent price fluctuations. The RSI consistently remains below 46.2, indicating an oversold condition and potential for a rebound. Considering the support price of $613 and the forecast for March 4, 2026, at $611, I recommend a long position with an entry price of $611. Place a stop-loss order at $608 to limit potential losses if the downtrend continues. Set a target price of $632, aiming to capitalize on a potential upward correction. To refine this strategy, we'll incorporate Bollinger Bands. The current price is near the bottom band, suggesting a possible bounce. If the price breaks above the center band of $668, it would signal a strengthening upward trend. Therefore, I suggest a portfolio combining the RSI and Bollinger Band strategies. The primary long position at $611 with a stop loss at $608 and a target at $632 remains. Additionally, if the price reaches $668, consider adding a secondary long position at $668 with a stop loss at $665 and a target at $680. This layered approach allows for maximizing profits while minimizing risk. Based on the historical data and forecast, XRP has shown volatility, trading between a support price of $1.35 and a resistance price of $1.4. The RSI fluctuates around 40, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of contraction and expansion, reflecting changing volatility. Considering the forecast from March 4, 2026, to March 10, 2026, which predicts a price decline to $1.31, I recommend a cautious strategy. We will initiate a short position at $1.38, placing a stop loss at $1.41 to limit potential losses if the price rebounds. The target price for this short position is $1.34, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI drops below 35, indicating an oversold condition, we will consider covering the short position or reducing exposure. Conversely, if the price touches the lower Bollinger Band, it might signal a potential reversal, prompting a reassessment of the short position. The most efficient portfolio will be a combination of the short strategy and a wait-and-see approach, observing market behavior before committing further capital. This approach balances risk and reward, aiming for high returns while mitigating potential downsides. Based on the historical data and forecast, Solana has shown volatility with a clear trading range between $78 support and $86.9 resistance. The RSI indicator fluctuates between oversold and overbought levels, suggesting potential buying opportunities when the RSI dips below 30 and selling opportunities when it rises above 50. Considering the Bollinger Bands, the price has been oscillating within the bands, indicating periods of consolidation and potential breakouts. The forecast data suggests a slightly bullish trend with prices hovering around $82.8 to $83.5. Therefore, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. My strategy involves a long position when the RSI falls below 33.0 and the price touches the lower Bollinger Band. For example, if the RSI dips to $32.4 and the price hits the lower Bollinger Band of $76.6, enter a long position at $76.6. Set a stop loss at $78, just below the support level, to limit potential losses. The initial target price is $84.1, aligning with the forecast price and the middle Bollinger Band. If the price continues to rise and breaks above $84.1, adjust the target price to $86.9, the resistance level, for maximum profit. This strategy aims to capitalize on short-term price fluctuations within the established trading range, balancing risk and reward for high returns. Based on the historical data and forecast, TRON shows a slight upward trend, but the forecast indicates a potential downward movement. The RSI consistently fluctuates between 42.0 and 56.7, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands indicate that the price is currently near the upper band, which may signal a potential pullback. Considering these factors, I propose a cautious strategy focusing on short-term movements. We will implement a strategy based on RSI, using an oversold level of 20 and an overbought level of 80. When the RSI falls below 40, we will enter a long position at $0.276, with a stop loss at $0.275 and a target price of $0.285. To enhance the portfolio's efficiency, I suggest incorporating the Bollinger Band strategy. When the price touches the upper band, we will enter a short position at $0.279, with a stop loss at $0.28 and a target price of $0.275. Combining these two strategies, we can create a dynamic portfolio that adapts to the market's fluctuations. The RSI strategy will capitalize on potential rebounds from oversold conditions, while the Bollinger Band strategy will profit from potential pullbacks from overbought levels. This blended approach aims to maximize returns while mitigating risks, aligning with a high returns investment strategy. Based on the historical data and forecast, Dogecoin shows a generally downward trend with increased volatility. The support price is consistently at $0.0783, while the resistance fluctuates but remains relatively low. The RSI has been hovering between 36.8 and 48.2, indicating neither strong overbought nor oversold conditions recently. However, the forecast predicts a further decline to as low as $0.0846, suggesting a potential opportunity for a short position. Considering the Bollinger Bands, the price is currently near the lower band, which could indicate a potential bounce. Therefore, I recommend a short-term contrarian strategy, aiming to capitalize on a possible temporary rebound. My proposed strategy is to initiate a short position at $0.0914. Given the downward trend and forecast, I would set a tight stop loss at $0.095, just above the recent resistance level. The target price would be $0.0856, aligning with the forecast low and the lower Bollinger Band. This strategy aims to capture a quick profit from a potential short-term bounce while limiting downside risk. If the price breaks above the stop loss, it signals a stronger than expected upward movement, and the position should be closed to prevent further losses. This strategy is suitable for traders with a moderate risk tolerance and a focus on short-term price fluctuations. Based on the historical data and forecast, Cardano shows a fluctuating trend with consistent support at $0.256. The RSI consistently hovers around the mid-40s, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a downward trend, with prices decreasing from $0.27 to $0.252 over the next week. Considering this, I recommend a short position with an entry price of $0.261. A stop loss should be set just above the recent resistance level at $0.287 to limit potential losses. The initial target price should be $0.256, aligning with the consistent support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. However, the forecast indicates continued downward pressure. Therefore, if the price touches the support level of $0.256, we should close the position and reevaluate. If the price breaks through $0.287, we should immediately activate the stop loss. If the price reaches the target of $0.256, we should take profit and consider a long position if the RSI indicates an oversold condition below 20. This combined strategy offers a balanced approach, capitalizing on the downward trend while mitigating risk with clear entry, stop loss, and target levels. Based on the historical data and forecast, Bitcoin Cash exhibits a downtrend, especially considering the recent price decline and the forecasted lower prices for the coming week. The RSI consistently below 50 indicates weakening momentum. Given the support level at $441 and the forecast price dropping to $419, I propose a short selling strategy. Entry price will be $457, with a stop loss set at $462 to limit potential losses if the price unexpectedly reverses. The initial target price is $434, aligning with the forecasted price. To enhance this strategy, I'll incorporate Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition and a possible bounce. However, the current trend is strongly bearish. Therefore, I will maintain the short position. If the price breaks above the upper Bollinger Band, it will signal a trend reversal and I will close the position. The final portfolio will prioritize the short selling strategy with a focus on the forecasted downtrend, incorporating Bollinger Bands as a secondary confirmation tool. The position will be adjusted based on the actual price movement and the RSI readings. Based on the historical data and forecast, Chainlink shows a mixed trend with periods of volatility. The RSI consistently remains below 80, suggesting the asset is not consistently overbought. The price has tested the support level of $8.19 several times, and the resistance level of $9.08. Considering the forecast data for the next week, with prices fluctuating between $8.46 and $8.64, I recommend a moderately bullish strategy. We will enter a long position when the RSI falls below 35 and the price touches the support level of $8.19. The entry price will be $8.19. To manage risk, place a stop-loss order at $7.9, just below the lower Bollinger Band. Our target price will be $8.9, aiming to capture a significant portion of the resistance level. To maximize returns, we'll implement a layered exit strategy. Initially, secure 50% of the position at $8.9. If the price continues to rise, move the stop-loss to the entry price of $8.19, effectively turning the trade into a break-even position. Subsequently, secure the remaining 50% of the position at $9.08, the resistance level. This approach combines RSI-based entry, Bollinger Bands-based stop-loss, and resistance-based target prices to optimize risk-reward ratio and capitalize on potential upward movement in Chainlink. This strategy is designed to be adaptable and responsive to market fluctuations, providing a balanced approach to high-return investment. Based on the historical data and forecast, Terra Luna Classic demonstrates a slight upward trend with increased volatility. The RSI consistently fluctuates, spending time both above and below 50, indicating a lack of strong directional momentum. The Bollinger Bands show expansion, suggesting increased price fluctuations. Considering these factors, I recommend a moderately bullish strategy with risk management. We will implement a combined RSI and Bollinger Band strategy. The entry point will be triggered when the price touches the lower Bollinger Band and the RSI is below 30, indicating an oversold condition. We will enter a long position at $0.0000326. To protect against potential downside risks, a stop-loss order will be placed just below the lower Bollinger Band at $0.0000320. The initial target price will be set at the upper Bollinger Band, $0.0000374, aiming to capitalize on the predicted upward movement within the current volatility range. To refine the portfolio, we will implement a trailing stop-loss strategy. Once the price reaches the target price of $0.0000374, the stop-loss will be adjusted to a level just below the recent swing low, ensuring profit preservation while allowing for potential further gains. The forecast data suggests a continuation of the upward trend, with prices hovering around $0.0000417 to $0.0000432. Therefore, a secondary target price can be set at $0.0000432. This combined approach leverages both technical indicators and forecast data to maximize potential returns while mitigating risks. The strategy is designed to be adaptable, allowing for adjustments based on real-time market conditions and further data analysis. Based on the historical data and forecast, JasmyCoin shows a slightly decreasing trend with support at $0.00541 and resistance at $0.00554. The RSI fluctuates between 40.3 and 48.2, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show a contraction, suggesting potential volatility. Considering the forecast data, the price is expected to decrease to $0.00535. Therefore, I recommend a short position strategy. Enter a short position at $0.00543, with a stop loss at $0.00554 above the resistance level. The initial target price is $0.00535, aligning with the forecast. To refine the strategy, I will incorporate the RSI and Bollinger Bands signals. If the RSI drops below 30, indicating an oversold condition, consider covering the short position or setting a new entry price at $0.00528. If the price touches the bottom of the Bollinger Bands, it might indicate a potential bounce, so adjust the stop loss to $0.00537. The second target price is $0.00528. This combined strategy leverages multiple indicators to manage risk and maximize potential returns in a volatile market. Based on the historical data and forecast, Jupiter shows a clear upward trend. The price has been consistently bouncing off the support level of $0.16, and the RSI has been fluctuating between 38.9 and 58.3, indicating periods of both oversold and overbought conditions. The forecast for the next week suggests a continued upward trajectory, with prices ranging from $0.167 to $0.182. Considering these factors, I recommend a long position strategy. We should enter a long position when the RSI falls below 40, targeting the resistance level of $0.186. A specific entry point would be $0.167, with a stop-loss placed just below the support level at $0.158 and a target price of $0.186. To refine this strategy, we can incorporate the Bollinger Bands. the price consistently trades within the bands, offering additional confirmation. We can combine the RSI and Bollinger Band signals to filter out false positives. Specifically, we will enter a long position when the RSI is below 40 and the price touches the lower Bollinger Band, providing a double confirmation of an oversold condition. The entry price would be $0.164, the stop loss would be set at $0.157, and the target price remains at $0.182. This combined strategy offers a higher probability of success by leveraging both momentum and volatility indicators. Based on the historical data and forecast, Internet Computer shows a slight upward trend with support at $2.37 and resistance at $2.47. The RSI consistently remains below 50, indicating a generally oversold condition, with dips below 30. The Bollinger Band suggests periods of volatility, with recent prices hovering around the center band. Considering the forecast for the next week, with prices fluctuating between $2.31 and $2.37, I recommend a moderately bullish strategy. We will implement a combined RSI and Bollinger Bands approach. My strategy involves entering a long position when the RSI dips below 30 and the price touches the bottom Bollinger Band. Specifically, enter a long position at $2.31. Place a stop-loss order just below the support level at $2.35 to limit potential losses. Set a target price near the resistance level at $2.4. This strategy aims to capitalize on the potential bounce from the oversold condition and the support level. The predicted forecast price of $2.34 on March 4, 2026 Wednesday, will be a good entry point. Based on the historical data and forecast, Ether.fi demonstrates a volatile trend with periods of consolidation and upward movement. The RSI fluctuates between 37.8 and 53.2, indicating neither consistently overbought nor oversold conditions. The Bollinger Bands show that the price has recently been near the upper band, suggesting a potential for a pullback. Considering these factors, I propose a strategy that combines RSI, Bollinger Bands, and support/resistance levels. We will implement a long position when the RSI dips below 40, near the oversold level, and the price touches the lower Bollinger Band. The entry price will be $0.492, with a stop-loss placed just below the support level at $0.446, set at $0.44. The initial target price will be the resistance level of $0.568. To refine this strategy, we'll incorporate the forecast data. The forecast shows some volatility, with prices fluctuating around $0.5. If the price reaches the initial target of $0.568, we'll move the stop-loss to the entry price of $0.492 to protect profits. A secondary target price will be set at $0.533, coinciding with the upper Bollinger Band. If the price fails to reach $0.568 and shows signs of reversal, we will exit the position at $0.533, securing a partial profit. This combined approach aims to capitalize on potential upward movements while mitigating risk through strategic stop-loss placements and profit-taking targets. Based on the historical data and forecast, Aptos shows a fluctuating trend with periods of consolidation and upward movement. The RSI consistently remains below the oversold level of 20, indicating a lack of strong selling pressure. However, the recent upward trend and the forecast suggest a potential for further gains. Considering the Bollinger Bands, the price has been fluctuating within the bands, indicating volatility. The forecast suggests a range between $0.917 and $0.95, with a slight upward bias. Therefore, a moderately bullish strategy is recommended. I suggest a long position with an entry price of $0.917. The stop-loss should be set just below the support level at $0.928, specifically at $0.927, to protect against a potential downside reversal. The initial target price should be set near the upper Bollinger Band, around $0.95. If the price reaches this target, consider trailing the stop-loss upwards to lock in profits and potentially capture further gains. If the price continues to rise, the final target price should be $1.01. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Kite shows a fluctuating trend with periods of consolidation and minor upward movements. The RSI consistently remains within the 50 to 70 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. The forecast prices for the next week indicate a slight upward trend, hovering around $0.25 to $0.26. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $0.218. The stop loss will be set slightly below the support at $0.215 to mitigate potential losses if the price reverses. The target price will be set at $0.26, aligning with the forecast and recent resistance levels. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll enter a long position at $0.218 with a stop loss at $0.215 and a target price of $0.26. Conversely, if the price touches the upper Bollinger Band, we'll consider a short position at $0.282 with a stop loss at $0.285 and a target price of $0.26. Combining these signals, the most efficient portfolio will prioritize long positions when the RSI is oversold and the price is near the support level. Therefore, the final strategy is to enter a long position at $0.218, set a stop loss at $0.215, and aim for a target price of $0.26. Based on the historical data and forecast, Chiliz has shown a fluctuating trend with support around $0.0333 and resistance around $0.0386. The RSI has mostly been below 50, indicating a generally weak momentum. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering the forecast for the next week, the price is expected to remain within a tight range, around $0.0322 to $0.0336. Given this information, I recommend a conservative strategy focusing on short-term gains within the established range. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will enter a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. For example, if the RSI falls to 28 and the price hits $0.0302, we enter a long position. The stop loss will be set just below the support level at $0.0325 to protect against a further decline. The target price will be the resistance level at $0.0386, aiming for a significant profit within the current trading range. This strategy should yield consistent returns while managing risk effectively. Based on the historical data and forecast, Lombard shows a strong upward trend, breaking through the resistance level of $1 and approaching $1.18. The RSI consistently moves above 50, indicating positive momentum, with a peak reaching 70.3, suggesting a bullish sentiment. The Bollinger Bands have been widening, indicating increased volatility and potential for further price movement. The forecast prices support this upward trend, with consistent increases over the next week. Therefore, I recommend a long position strategy. Specifically, I propose entering a long position at $1, coinciding with the start of the forecast period. Given the strong upward momentum, a conservative stop loss should be placed at $0.932, just below the support level, to protect against unexpected downturns. The initial target price should be $1.1, aligning with the forecast price for March 6, 2026. If the price continues to rise, a second target price can be set at $1.18, the final forecast price for March 10, 2026. This strategy combines trend analysis, RSI confirmation, and Bollinger Bands volatility assessment for a high potential, yet managed, investment approach. Based on the historical data and forecast, plasma demonstrates a volatile trend with recent upward momentum. The RSI consistently fluctuates around 40 to 60, indicating neither strong overbought nor oversold conditions, but the recent values are trending upward. The Bollinger Bands show that the price has been oscillating within a defined range, with the price recently approaching the upper band. The forecast suggests a continuation of this upward trend, with prices potentially reaching $0.112. Therefore, I recommend a long position strategy. I propose entering a long position at $0.103, coinciding with the support price and a potentially favorable entry point given the recent upward trend. Set a stop-loss order at $0.099 to limit potential losses if the price reverses. The initial target price should be $0.115, aligning with the recent high and reflecting the projected upward movement. If the price reaches $0.115, consider moving the stop-loss to break even at the entry price of $0.103 to protect profits. A secondary target price can be set at $0.119, the resistance level, to capture further gains if the upward momentum persists. This strategy combines support and resistance levels with RSI and Bollinger Band signals to maximize potential returns while managing risk.